What up, everybody? Welcome back to Royal Blu FX. In today's video, we're going to go over some of the trades that we've taken last week, Friday. This is going to be a recap video on the US30. We always trade the US30, so without any further ado, let's begin. Alright, so for a lot of you that know us out there, we obviously scalp every single day. We're scalpers. In rare cases, we would sometimes be trading long-term trades, but that's very rare. This channel is really about just trading smart money concepts with price action. So without any further ado, let's begin. All right, so as you guys may know us, we usually start on the 15-minute time frame as our higher time frame. We see what is happening behaviorally on the higher time frame as well as structurally. And in this case, we were trading right here this last Friday. I believe that was the 14th of Friday of last week on October the 14th, Friday. So you guys can definitely go over and check us out on these trades that we've taken. So we start on the 15-minute time frame, and then we start looking at what is happening. We marked out our liquidity. Now, sometimes I don't mark out this liquidity the way it should be, like this and like this, only because I'm in a rush to start scalping, which is kind of bad at the same time. So when you're in a rush, you don't want to be rushing your trades, obviously. But you know, being in the market for about the last 5 years, I know what I'm doing. So I kind of quickly marked out my liquidity just so I know where liquidity is. Once I did that, I had this demand zones printed here because these are the demand zones where price was going to react from what I could see. And the reason for that is because you can see when liquidity's forming here, like there's a buy and there's another buy, there's bound to have the market is bound to react to these area of demand zones because liquidity is so close to it. Okay, and so right over here, if you zoom in, you can see there's liquidity that reacted to this demand zone. There's more liquidity here. The market reacted off to this demand zone after this liquidity. My whole anticipation was to see if the market could push bullish here. Obviously, it started going bearish, which is totally okay. If you understand our concepts of trading, you'll understand why we're marking out these liquidity zones. But in this case, if a lot of you don't understand, liquidity is usually used for the markets to, as oil, essentially, to move and push the markets in the opposite directions or in the intended direction. So in this case, you can see that when price pushed bullish like this, I could see that liquidity was taken. So price started going in the opposite direction, right? So we were then looking at essentially this area. We start at 4:30 p.m. here because that's when the markets start opening up for the US30 index. And let's go down and scale down the lower time frame so we can show you what's happening. So I usually start about 4:15 p.m. Hence as to why I mark everything out so fast, right? Not having to place everything correctly, or excuse me, not correctly, but like identifying this like as a liquidity or whatever. But knowing that I just had a line here, this is what told me. This tells me this is liquidity, right? Anyway, so without any of this gibberish, I'm going to continue as to why I took these trades and how I took these trades. So after I marked out a liquidity on the higher time frame, I jumped down to the 1-minute time frame just to kind of see behaviorally again what is happening. You can see here the time right here. It says 16:20, as you can see, right? So about 6:15 is when the market's open, and I started to realize, I started just to kind of see what the market is trying to do. I knew the markets were supposed to come to this demand zone. That's what I'm looking for, right? But at the same time, I'm looking for also a sell because prices have just taken out this huge form of liquidity that was here. And you can see that prices have aggressively moved. Once price moves aggressively after liquidation, the liquidation process, we will look for prices to retrace back up to its origin, back to its origin right here. So I automatically knew that this was an area, this right here, the supply zone is where price is going for right here, right? I didn't mark it out, of course, because sometimes when you've been trading for so long, you start to understand and see the process of trading and the process of the markets, where they're all going. So there's no real need for you just to mark out everything, unless if it helps you, then it helps you, right? So here's what happened. 16:28 is reaching right now, and you can see that we dropped down to the 5 seconds here. I took this trade on the 5 seconds. I wasn't. And this is the natural time frame, the normal time frame as to where I look to enter. So here you can see I was marking everything out. I was looking for the chalk. There's my chalk. I saw price here at 630. Let's go down here, 630. If I align my crosshairs correctly, if you look right down here, it says 630 right there. So when 630 starts opening, normally the markets just start shooting, right? They start impulsively moving to the downside or impulsively moving to the upside. My knowledge of this, seeing when price was supposed to go bearish here, was that when 1630 happened, I could have sold over here. Let me just zoom in here and show you what I'm talking about. Right here. You can see here, 1630 opened up right here, right? And I was looking to sell it off at this high over here, okay, because that was the last bullish candle before the major push down. But of course, a lot of people can, you know, argue with and say that, well, this is your order block, right? This is your flip zone. Well, that's technically true, right? I just had this as my speculative, you know, area of where I thought price should go, right? And then price left liquidity, so I was having an idea of thinking, okay, well, price should come back to liquidity and then take me down, and then go push bearish, right? So anyway, price pushed bearish. Excuse me, price pushed bearish all the way down here. I didn't react to it. I didn't chase it right away, knowing that when price came here, all the way to the left side of things here, there was an order block somewhere. Price was acting off at an order block right around here. Right there, there's liquidity right there. So it was acting off to something down here that I couldn't see. But nonetheless, I knew this was where price was supposed to push bullish now because A, we had liquidity here. B, we had the aggression that just came in, breaking this high here, hence the chalk, right? And so once the chalk formed, I was like, great, this is where I'm looking to enter. So this is a wick down here, this huge wick that left was the last sell before the buy happened, and this is what told me that this is where the last down candle will be. So I highlighted this, right, as you can see, and the reason why you need to highlight these candles is because these candles leave an order block that a lot of you and I can't see, right? Humanistically, we just can't see. So there's a hidden order block in there that you can't see, hence as to why I told myself that this would be the order block. At the same time, I marked out more liquidity like this. At this point, right, I was seeing if prices could respect this area here, right? And of course, it respected by showing us more wicks. It respected the slow. Prices started to push bullish, and I knew that this is where my buying area was. I was literally right, it was actually right there, yeah, right there. So I bought right below in my discount zone, not my premium zone here, okay? I bought it in the discount. Once I bought it, then I just have to entrust the process that prices should go bullish. So I was looking to hold this, right? And normally when I hold these, I pay myself when prices, you know, when I enter the markets, I pay myself about 3 to 5% out of the time. And the reason for that is because you want to pay yourself is because you've done the hard work already, right? When you've done the hard work, you don't want to just be, you know, risking your whole trade and say, okay, well, I know price is going to go up here and it's going to stop, and this is where I'm going to collect all my, you know, all my money, right? Well, no. Technically, what you should do as a trader is to collect some of your money, right? Because you did all the work. What if prices went against you? Then you would think to yourself, oh, shoot. Now you regret, and you said, I wish I could have closed the trade, or at least close partials, right? So what I typically do is take the trade, right, and I exited right here, right about 5% of the way, right around here actually. Okay, right, yeah, anyway, like right around this area. Right, close about 5% of the way, and I'll let the rest thing run. The reason for that is because, again, if prices go against me, I would then already have collected some money, and then if it came against me here, where my risk zone is, right, I would close at break even, because now I've made some money, but I also broke even, which is a win for me at all times. The real important part of this part of these entries is really risk management. And a lot of people lack on that. Okay, so. Once I took my entry, right, I took 5% and let the rest run. Of course, liquidating it more at 8%, then it was at 9%, right? And then once we got up to this high here, this is my high that I was targeting right over here, as you can see, right? Even though I knew this was my supply zone, I was still targeting this high to see if price could tap this high. And normally, you know, prices do target these highs, but sometimes you don't, right? And then I squeezed a lot of this out, you know, liquidated this move a lot. So I let the rest run. Of course, price just went against me, and I broke even all the way down here. So that was no problem, right? Again, and the reason why I left some running is because there is that chance that prices could just continue bullish like this, and if they do, I'm still making more money. Like, I'm still making more money. I didn't have to shop, you know, or trade or look for more possible entries to continue looking to enter the markets, right? I didn't have to do a lot of the hard work, so therefore I just let the market do its thing, right? And of course, there'll be times when prices go against you like this, and you would have to break even. Now, obviously, this isn't a loss. You've obviously won money. You made money here. So, of course, in these sort of trade setups here, the market setups, what I try and typically do isn't try to rush into markets. You know, I'm not trying to rush into buy or sell, despite even having the slightest idea of thinking, okay, there's a huge possibility price is going to go here, so I'm just going to buy, right, or sell. You know, I typically wait for certain things to happen in the market, and a lot of that certain things is, you know, pretty much my rules. The rules is, you know, you wait for price to break structure, right? You wait for price to create liquidity. Once you see that liquidity, wait for price to then show that aggression. Once you see that aggression, you wait for price to retrace, go back at the origin of that high, and then you look for that sell, right? That's really essentially what all the rules are. You can see here what I just did. Knowing that this low here was not able to break this high, and we had this huge area of demand zone here just waiting for us, right? You can see here there's a lot of liquidity that price was that was set up there. So I was bound to look for the sell going bearish here to target all this down here, because I knew that we were still essentially bullish in the higher time frame. And you can see this low here breaking this high here. But then again, you were using this liquidity. The markets were utilizing this liquidity to push the markets bearish. So right here, once all my rules met, right, we had that break structure. I could have sold right here at this supply zone here, but the reason why I didn't is because we had a huge supply zone, and I am not the type of person who likes to risk so much at a supply zone, especially when the supply zone is huge. Even this is huge, still big for me, right? It's still big. So what I typically do is when I see a huge zone like this, I still wait for more confirmation. That confirmation has to repeat rule number one, right? Is essentially looking for prices to create liquidity, then liquidate, then mitigate, then show me that aggression, and then show me that chalk boss, and then entry. So here, you can see here how we had aggression happening right here. There was a lot of aggression, right? And so we had that chalk boss here, which is what's important, right? Change of characters show us that the market is changing the direction. So it's going in the opposite side, right? We are in the intended direction. Actually, price is going bearish here. You can see this high and this low here. So we're looking to follow the flow of orders. And so here is when we decided to look for the entry. You can see how right here, if I align my crosshairs, you can see this break here. This is our type 2 break of structure. Prices didn't mitigate just yet, but this was the area here where price hasn't mitigated this order block. So I was thinking to myself, okay, well, price broke once, didn't mitigate, then price broke second time here. So then I told myself, all right, well, once we see this aggression, what do I need to typically see here? Well, I need to see my order block, and my order block was here at the time. But then, as you notice here, you see where I entered. I had my risk zone right above here, just right above here, and that's only because there was some liquidity sitting right at this high here that I noticed that I didn't mark out. So I put my zone just above it like this, so that way if prices did come up, it could tag that liquidity and then push price bearish. And you can see if I align my crosshairs, if I zoom in right in here, you can see how the markets have come here and then just slightly, ever so slightly, taken out that liquidity. See that? Right there, there's that wick right above this liquidity. Boom. So it took out that liquidity, and that's when price started going bearish. And I said, this is good news for me. And then, yeah, prices were starting to range. Once price started to range, I was like, I'm looking for that drop. It's not dropping anytime soon. And all of a sudden, this is the beauty of trading, seeing these huge, ginormous candles just pushing bearish. So once price went bearish, I was like, whoa, this is crazy. This is great. Now I want to show you this. I was targeting this low just to be safe, right there. And I was looking to make 8.2% right there, as you see, right? But then when price started going bearish, I was like, well, great. I'm going to extend my reward and target this demand zone. Prices went right below it, and I was like, all right, great. Let me just adjust and see what is going on here, because now I'm looking to really milk this, right? You can see right here we had a lot of liquidity, right? So I'm looking for price to come down here. Although I made so much money off of this trade, sometimes I don't think about leaving, some partials, right? I don't take partials out. Sometimes I just take the whole trade, right, and just liquidate the whole thing and then just cut out of the whole trade. So in this case, that's what I did. You can see here where price, I just stopped, took out the whole trade over here and let the rest run to see where the markets would go. Of course, I'm not in the markets now after I've taken out all the money, and you can see prices going bullish here. I'm like, okay, something's weird. I didn't mark out my demand zone, I guess, correctly, but I'm thinking, no, I marked everything out correctly. This is a clean break of structure here. It is also, actually, now that I see this, it is liquidating this right here. See, there's your buy right there. 2 buys, 1, 2, double bottoms, came down, took out this, liquidated this low here, and it started pushing prices bullish here. So in any case, we made some real good R&R on this one. We had a 27.7%. So it's 27.7% is what we caught here, which is beautiful. This one, in fact, was 12% here. So that was good, right? All you need is 5 to 10% a day, and you're good. I generally take about 5 to 7 trades a day, sometimes maybe 10 trades a day, just scalping. But it's all about the lot sizes that I also use. If I'm using ginormous lot sizes, I can take about 2 to 3 trades a day and I'm done. In most cases, a lot of the markets, when the markets open up, right, a lot of the banks, when they trade, they only trade for the first good 2, maybe 3 hours at most, and then they're done. And the markets then start slowing down. There's not a lot of volume that is being traded. What I'm trying to do is what I essentially am doing is trading the volume out of these trades, right? So I'm utilizing and trying to take advantage of trading a lot of the volume from the open of the markets, because that's where all the money is, and then of course utilizing my leverage I have 500 to 1 on my leverage, and I pretty much use a lot of big lot sizes. I won't talk about how many big lot sizes I'm using here, but I use a lot big ones. And so so this is how it all happened. We had one more trade right down here, which I'm going to come down and explain in a second. So what I typically do is when I've had 2 successful trades, I'm typically not trying to rush into the markets right now. I'm not trying to rush in, because right now if I'm trying to rush in to get into more buys and more sells, I'd be exposing myself to more risk. And the beauty of really just having wins, right, is to obviously control the amount of risk that you're being exposed to, right? You don't want to be exposed to too much risk, but then again, you don't want to lose a lot either, right? I'm not trying. My whole idea about trading isn't to try and win every trade, even though that's what I'd like for it to, obviously, but it's to minimize risk as much as possible, but only trying to get the best setups in the market, not something that I can't understand and I can't see. So here's what I'm looking at. And another thing is I'm also trying to time sort of my time on the computer. Like, I don't want to be more on the computer more than 2.5, maybe 3 hours at most, like the banks, right? I'm trying to squeeze as much as I can based off of the volume that they provide in the first couple of the few hours out of the day, and then be done. So that's another thing. If I can't find any more good possible trades within that time frame of the 2 to 3 hours, then I don't look to trade anymore. Here is something interesting. So the reason why I'm looking for a buy here is because if I zoom out here, you can see this whole right here, this area was just liquidated. Right here, there's a buy here, right here, and right here. Right, once these two buys are happening, that's forming liquidity. The markets have just come and just liquidated all this, right? My natural intention here is to say, okay, well, we're at an area of demand right now, and markets have just liquidated this. This tells me if we're in a demand market, it's liquidating now, I want to be trading away from liquidity, and therefore I'm looking for some sort of sign that prices could give me, you know, an advantage of looking to enter, right? So let's look over here. Right here, once we liquidated all this and the huge liquidity over there, that liquidity zone, I was looking for some information that would give away, and that giving away that data that I'm looking for is that aggression. So here you can see that aggression right here that formed at the chalk. Of course, I didn't have it, you know, written out there, right? Now I do, right? Sometimes again, when you're very well, you know, adapted to the markets, and you're like a veteran in the markets, you don't really need to mark out everything, right? Just as long as you know what it is in your head. Here, this was a chalk, so we had the chalk. We had more liquidation here, actually, to be honest. Right there. Didn't even see that. But it helps. Every little bit of inch of information helps. And then so I saw this here, and I said, okay, well, this low here respected this low. We had the chalk. We had more liquidity taken and more liquidity here taken, right there, and the big one obviously over here to the left. And then once everything kind of meets together and meshes together, all this data meshes together, it's coming to my head as, okay, this is a good opportunity. These are the high setups that I like. Excuse me, I have a little cold. All right, so here you can see, well, I had the supply zone to see if price can respect the supply zone, because we had this demand zone sitting right below, and I was like, okay, well, I need to see what's happening. All the setup has happened over here, all the way to the left. Liquidity, the aggression, and then also what I noticed here as well, which I didn't mark out, is more liquidity and inducement right there. I saw this obviously, but I didn't mark it out, and so this is what told me is, like, when I saw this more aggression coming in here, we had this break of structure, I was like, okay, well, this is a good sign. Let me see now what this area here would do. And what I'm typically looking for now, this is the second confirmation actually, because this is the first confirmation, which I could have taken a buy here, but knowing that I had this demand zone here, I didn't want to just buy it off of this first test. I needed this second test because we're nearing that demand zone. Okay, so we had another break, and let's fast forward here so I can show you what's happening. Okay, look what's happening. This gave it away. This low here came all the way down, liquidated this huge area here, this liquidity right here. So you can see I marked it out, right? I marked out all this liquidity, and I'm like, this is a good sign. All I need now is for price to show me the aggression, and then I'm going to look for the entry, right? I didn't enter here. I entered as soon as price broke. It broke, and it came and tapped me in quick, and then I was in the trade. And so this is what told me, I was like, this is my buy. You can see here price is going bullish. I took some, I liquidated some of this. I took some of the partials, and I let the rest run. As you can see right over here, this is the supply zone I was targeting. Let's go. Okay, and there we go. That's where I ended. I stopped the whole entire trade right at the supply zone. Right, initially thinking to myself that prices should go here and react and push bearish. The reason why is because we have, this is our next high here. Excuse me, this is our next high right here. So I was hoping that price could just stop here and then go bearish or whatever, right? But typically this is why I was targeting the supply, because I had the intention of thinking that price should go bearish here and tag this demand zone, which obviously doesn't have to, right? Price has more plans for wherever the price should go. Now, price broke above. I marked this out as my liquidity, right? So prices could actually come and tap this supply zone here and then push bearish from here, right? But after this third trade, I was done for the day. I didn't bother looking at any more of the markets. And look what's happening. Liquidation, right? Aggression again. So I could have gone in this other trade, but I didn't bother. I was done. But yeah, just want you guys to see what's happening here. Look at that. Right? Look at that. So obviously, knowing my rules, the market keeps showing its the market keeps showing its true colors every time you're every time you follow our rules. Our rules are very simple and very easy. Now, a trade like this, obviously, as I mentioned to you, when price came up, took out this liquidity, our expectation is to look for sells, right? A lot of you may think, oh, there's a break of structure, this is a chalk, I should be looking for buys here, you know, and look at these people that bought, right? Got stomped out, right? So it's very crucially important to follow the rules. And if you're with us, obviously, taking our courses online, you'll understand how all these scenarios work. All right, guys, I hope this was very helpful and very informative. Please leave a huge like on this video, and definitely consider subscribing to the channel, because we always give out free content. Until then, guys, I will see you in the next.